Let's get across the market open now. Mark Gardner joining us from MPC Markets. Mark, welcome to Monday. Looking for a very negative start on the local index, all about the Trump effect, really.
Yes, absolutely. 25% tariffs came in Canada and Mexico. Obviously, it's going to affect a lot of the metals, particularly copper, aluminium, zinc. Very high in terms of imports for the US, particularly from Canada and Mexico. Aluminium and zinc particularly, but obviously copper. They import about 36% of copper into the US, and obviously they've just made a massive announcement about building data centres as well, so they're going to need copper. It could benefit companies like Newmont, who obviously have domestic operations in the US. Nevada, I think they produced 30 billion pounds, I believe, of copper last year in the US. So yeah, we'll be looking for companies like that are producing in the US. James Hardie may be another company that benefits from there being external tariffs, given that they're obviously building products sold and they've got the base operations in the US. And obviously coming off the back of a couple of fairly severe hurricanes and the fires in California, they're probably going to have a backlog of orders over the preceding couple of years as well. But for everyone else, I think it's going to really unnerve markets, and it does really wipe any chance of rate cuts from the Fed. I would say off the table for at least 12 months because tariffs, as we know, are very inflationary short term, and that may see the RBA take them off the table for the near term as well.
Well, hence the negative opening today. So sector-wise, I mean, you mentioned that a few of those stocks, obviously commodity is going to be in focus if he actually follows through with those tariffs.
Yeah, I mean, it's been signed in and there's been retaliatory tariffs from Canada immediately as well, totaling about $150 billion. So, you know, it's the start of a little bit of a trade war. We'll see how it plays out. But markets don't like uncertainty, and I would say the likes of the multinational miners like BHP and Rio are probably going to suffer a little bit today, just on the back of having operations, particularly in Canada and some in Mexico as well. So I do believe long term we're probably going to the Australian miners will probably sit in the sweet spot. I think China and the US can't do without Australia in terms of our critical minerals and just our base minerals and the need for our mining. So nothing's been placed on Australia as yet, and I can't really see either party, China or the US, trying to gain some form of exclusive deal. So we may get lucky long term, but as I said, markets don't like uncertainty, and we've obviously got a little bit of the Australian earnings season starting this week. I think Nick Scali, News Corp, two of the names this week. Yeah, we'll see. I think Citi's expecting earnings to contract about 1.6% across the board. So you might see some of those really frothy valuations start to be taken out of the market as we go into earnings season. And we've got Google and Amazon in the US this week as well as payrolls, which will be the big show at the end of the week in the US.
Yeah, in fact, going to be interesting to see how those consumer discretionary stocks perform during earnings season. In fact, we've got to read on retail data today too. So with the prospect, maybe a rate cut, but maybe not now.
Well, yeah, I mean, the rate cut really wasn't on our cards, to be honest. There's a little bit too much uncertainty, although this is probably the last chance the RBA does have until at least May when the election's out of the way. So that brings the chance up a little bit for us. If they're going to move at all, that this would probably be the smartest time to go, so they're having the least effect on the election as they possibly can, which the RBA has traditionally done. Yeah, the retailers particularly, we'll just see. We did have some, you know, the likes of Zip saying they had record usage of their platform about a week ago, particularly in the US. You know, there may be still some life in the consumer yet, and you know, we will just see. But I think the high quality retailers will obviously shine through. But I think the likes of Nick Scali, etc., there's a little bit of uncertainty for them. given the UK expansion and the European economy is not doing so well, and those large ticket items are probably going to be the ones that we take off the list first as we start to move down the scale for buying. As Koshi always refers to the lipstick purchases or the small things that we buy. So maybe those retailers with the smaller ticket items that do a little bit better.
You mentioned Zip. That came off about 20% or so. Seeing that as a buying opportunity or not?
Look, it's not really a space we're playing in, to be honest. It was a great call when it was a hell of a lot lower. I think it's still probably a sell at this stage. I think the market got a little bit carried away with itself. But that US growth is looking fairly solid, but we'll probably just review that as time goes on, but not at these prices at the moment.
And Mark, we obviously began there with commodities. Is gold a place you still want to be at the moment, given that uncertainty we're seeing, and obviously now with the trade wars upon us?
Yeah, I mean, historically, and you could go back to when the sterling dropped out of being in favour to the US dollar, and there were very large tariff wars going on. Essentially anyone who was importing and exporting went back to gold. And so it does, from a historical standpoint, and this was a couple of hundred years ago, but that we do tend to defer back to the historical mean in that regard. So I think importantly, Trump's obviously trying to raise some funds here to fund that US debt, but we're talking hundreds of billions here at the moment. I mean, the debt is currently spiralling at $1 trillion every 100 days, just on interest alone. So I see the US dollar as a very large sell here at the moment until he starts talking about addressing that debt, because that will come home to roost at some stage. I mean, it's spiralling towards being half of their tax receipts by 2028, and this is really just a drop in the ocean, having a trade or tariff war. So I think there'll be a lot of uncertainty on how this plays out in the near future, and that's not good for companies that are at really frothy valuations, as I said before.